What's up, everybody? How we doing? Spencer Israel here. Very excited for our brand new show, Futures Trading with NinjaTrader. We have ourselves a guy who's spent his entire career trading futures. He's going to spend some time with us talking about why he likes the futures market, what he's seeing out there, and we'll answer your questions from the chat. So let's get the show on the road here. Smash that like button for me, please, and thank you. And let's roll the intro, whoever's in charge of this thing. Jim Cagnina, what's up, man?
How you doing, Spencer? Everything's great. How you doing?
Doing fantastic, So I just explained the premise of this show as quickly as I could. We have a show all about futures. This is going to be a weekly show, Mondays at this time. Jim, before we get into the actual stuff here, just tell us about your background and how you've spent your career, in trading futures.
Yeah, so I literally in high school and through college, way back in the early 80s, I worked on the floor of the Board of Trade long before there was any online trading or electronic trading. The Chicago Board of Trade in Chicago. I was in the 30-year Treasury bond pit, and that was my first exposure to it. I was trying to make money for college, and I was, working, whenever I could. And that was it. I had some relatives in the pit that were locals. They were trading, and I was a clerk or a runner, and I was the guy that, had to do all the dirty work.
Right.
So then I got involved late, really in the mid 90s. I came back into the industry full force on the retail brokerage side, and really started in earnest in 2001 as the full-time online trading environment with Infinity Futures, and then I've kind of rolled into this role with NinjaTrader.
Awesome. So we talk about the futures a little bit on our morning show, not a ton though. For people that are not used to the futures market, maybe they trade stocks, they trade options, they trade ETFs. Let's just spend like a couple minutes before we get into the nitty gritty of the markets today. We'll spend a couple minutes. Just tell us why you think the futures market is like the best market to trade.
Well, I'm a super fan, obviously, but these markets are they're traded at a regulated, centralized exchange, right? So all the benchmark markets that you see here, and I'll go through them on my screen in a second, they're globally recognized. The trader in Japan sees the same thing as the trader in Los Angeles, the same thing the trader in Brazil or London or Chicago, and it's transparent and it's fair. And what the CME did was they created an electronic exchange based on a first in, first out system. And not only that, they've created a lot of these markets so just everybody could participate. We have regular classic size markets, we have micro size markets, smaller size markets. So that's kind of number one, is this whole regulated, efficient, transparent exchange. Number two, you could fund your account more capital efficient. Now you got to be careful with the leverage. The leverage is a double-edged sword and all that stuff, but it's not scary if you use it correctly, in my opinion. And so you don't need to be a pattern day trader and fund an account with $25,000 to get this great technology, a trading ladder, and all the stuff I'm going to talk about that you see on the screen right now. That's kind of number two. Again, accessible to everybody. And then lastly, every major asset class is represented in a liquid market. It's so really whatever you want to, whatever your opinion is in whatever marketplace and wherever you want to participate, you can. So those are kind of basically my three big reasons why I'm so excited about it.
Yeah, it's so interesting whenever you hear one of the reasons people love crypto is that, the market never stops, it's 24/7. And I was like, yes, but like we already have that. Right?
Yeah. So, well, now we have Bitcoin futures. So there you go.
Exactly. We've come full circle. All right. Enough of that. Enough of the background. Let's actually get into the nitty gritty. Let's look at today's market. Okay, I've got your charts up on the screen. Jim, what exactly are we looking at right now?
Okay, so it might look complicated if you're brand new to trading, but it's really not. Not. On the upper left is just a control panel, and it's just simply a way to add certain features and customize and get information on your trading account. The bottom is a chart, You could have as many of these open as you want, as few of these open as you want. I have a tab driven at the bottom so I could toggle between different accounts.
Yeah.
So everyone who's traded probably has a chart, right? We do technical analysis through them. Now on the right, on the right here, Superdome. This is really where the rubber meets the road in futures trading. I was talking about electronic exchanges and transparency, and in the Superdome, it's just a price ladder, right? We just see all the prices in the middle, and the market is in the yellow, right? It's the last traded price. Mark to market is in the yellow, and it moves around. This whole competition between supply and demand, and buyers and sellers are driving market price. And then the buy column, you see bids, contracts that are sent to the exchange already. On the offer side, you see contracts that are sent to the exchange already for execution on the sell side and on the buy side. That's the trading ladder. It's really easy to trade on it. It's really efficient. And this data in these trade executions measured in milliseconds, really. I mean, it's really fast. On the right-hand side is just a quote board. I just have mine customized kind of funky on the right-hand side. And we talked about asset classes. And the way I have my quote board kind of set up is, stock index futures on the top, the stuff we know about, the S&P, the NASDAQ, the Russell 2000, the Dow Jones. I even have a German exchange. I have the DAX up here that I keep track of. These are all just major benchmark stock indexes. Then the micro-sized contracts below it, these are 1/10 the size. They're smaller. And when I say futures trading is accessible to everybody, here you go, because you could fund your account with a smaller size, and you could trade the micros. Currencies, every currency cross here, every major is covered in the future side. A lot of benefits. Probably another episode we'll talk about the benefits of that, because there's a lot of them if you're trading FX futures or currency futures.
Right.
But it's really a currency pair like we're all used to. There's micros on those. Energy, crude oil, natural gas, those kind of things are huge. Metals, gold, silver, copper, a whole bunch of stuff I don't even have listed here are very tradable in these markets. And then lastly, the whole yield curve you could trade, right? Everything from Fed funds all the way to a true 30-year bond, everything in between, 10-year, 5-year, 3-year notes, 2-year notes. That's all represented in a liquid fashion, really liquid fashion at the CME. Cryptos we talked about, micro Bitcoin. Relatively new contract, but gaining momentum. It's an easy way to participate in cryptos. And then lastly, the old-fashioned stuff, the commodities like the grains. These are this is what started it all. In the 1800s, and it's still very popular today.
John in the chat is asking if the price ladder is that like level 2 quotes.
That's a great question. Absolutely. This is a lot of people refer to a NASDAQ, direct access level 2 view of the marketplace. And again, you don't have to have $25,000 pattern day trade margin to get this in the future side. And the NinjaTrader's ladder is awesome. But that's exactly right, John.
Okay. All this being said, we just walked through a lot. Let's get some of this off the screen here for a second, and let's just look at the charts. And let's start with the S&P 500 E-mini futures, because those are the most liquid. That's the most liquid futures market out there. So pull up that chart for us if you can, because it's the first one. You said it's the first one you look at every day. What is happening right now? What's it showing you? And then we'll go from there.
So the first thing I do every morning is I go through my markets that I'm interested in, and I throw up a daily chart or a weekly chart, and I try to, in my mind, I try to say, hey, what's the state of the market today, this week? Am I looking for places to buy? Am I looking for places to sell? And so I kind of generate a market bias, right? And here's the S&P. And September 3rd, we had this high, all-time high up here. And then we had a huge break to the downside, and now we're rallying back up. And so right now I'm looking at this thing, and I see the 50 period simple moving average. And I'll do some other analysis a little bit later on this. But, right now it looks like we're driving back up, and we're back to bull mode, right? So now in my mind, I'm thinking, all right, my bias is bullish today. So let's take that into our intraday kind of thing. So that's what I do. And I have them all here. I have the micro NASDAQ. I keep an eye. Oops, let me try to get that there. Micro NASDAQ, real similar pattern. Stock index futures, relatively correlated, not perfectly correlated, but relatively. We have gold futures. Again, we're looking at gold futures. Really can't get to that 2000. It's kind of slowing its roll a little bit. So when I look at market correlations, I factor gold in. And then we got the micro Bitcoin, of course. Again, relatively new contract at the CME. But look at this. I mean, 2,900 down here on July 20th, and now we're at 62,000. It's amazing, amazing market. And then crude oil. Crude oil is a really popular crude oil. This is West Texas Intermediate. This is the U.S.-based crude oil. It's inversely related to the U.S. dollar, and it's a supply and demand market. So the first thing I do is I kind of develop my bias in these markets from a longer term point of view. And then I get into my day trading platform, right? So that's what we're seeing here. This is my 10-minute chart, and this is where I'm trying to make decisions on whether I should buy or sell, right? In futures trading, you could just sell if you want. You don't have to. There's no uptick rule. There's nothing to prohibit that.
There were a couple really good questions in the chat. Vinny and Jimmy, we're gonna save time at the end for chat, so I didn't forget about you. I'm not ignoring you. But know that we'll get to your questions, guys. They're great questions. We'll get to those in a little bit here. I just want to go through a little bit more in more detail, Jim, like our look at the markets, and also like then what? You've developed your bias for the day. Now what?
Great question. So now I drill down to my intraday chart. And I want to make some observations on volume. So I have the volume profile on the left, and this just tracks volume at any given price over the course of the session. And you could kind of see where market happiness is, where there's bigger volume. You could see this profile is generally a Gaussian shape, bell-shaped distribution. Not today, it's a little funky. But I'm going to use these lines for areas of interest. And I'm going to use the top of this dark blue area. It's called the value area as an area of interest. I'm going to look at the point of control, which is just the longest one here as an area of interest. And then the bottom line, which is the bottom of the value area. I have an oscillator at the bottom, commodity channel index. There's all sorts of oscillators on NinjaTrader you could use. It's heavy on the technical analysis side. And then a simple moving average cross at the bottom. The last piece of the puzzle, and we go into detail on my Tuesday and Wednesday live trade setups, is a Fibonacci retracement. I love the Fibonacci retracement. I just did high to low today, and that gives me more areas of interest, right? So what I'm looking at here is, hey, you know what? I want to see a retracement back down to that 61.8% again. I want to be patient. It lines up with the point of control, and then I would like to just, I'm going to right click on, I could trade on the trading ladder, trade on the chart, and send an order to the marketplace, right? So that's what I'm thinking. And then, again, you could do your stop losses and all that other stuff right on the chart, or it's in sync with the trading ladder itself. So let's make sure I have the right account number shown here, which I do. Maybe
is this your actual? What is this? Your actual account?
I've logged into simulated live mode, so these trades are not really going. Only because we're here in this half-hour period where I just want to demonstrate how the software works.
Yeah. Fair enough. So wait, you said you use all these indicators to get you areas of interest, whether it's volume profile, Fibonacci, whatever. What does an area of interest mean to you? Is that just a place you're going to throw out an order, or buy or sell order at a certain point?
Exactly. So in my mind, is it reasonable for us to go back down to this point of control again today or in the near term, right? So I have a 10-minute chart up. I'm looking for a trade idea that's going to last anywhere from a minute to an hour. And is it reasonable for this market to go back down to this point of control, or I put this order in, the 61.8% magically coincides today, for me to get long, for me to buy a contract, right? That's what I'm thinking. So I want to be patient, and I want the market to come to me because it oscillates, right? It goes up and down and sideways, and it's just not a one-way ticket, one way or the other. I'm not a fan of just throwing market orders in. Okay. So when I use this type of technical analysis, I'm looking for areas of interest that represents these points. Really the 3 points on the volume profile and the Fibonacci.
Okay. Why are you looking for those quick 1 to 10 minute trades as opposed to longer trades?
Well, that's just my style, and I think the software is really good. It's an exceptional software for day trading, right? It's very fast, it's very stable, it's very reliable. Data's coming in super fast. So my ability to get in and out and react to changes in the market is almost instant, right? So it gives me that ability to do that, and that's kind of what our focus is here. Is hey, we could take advantage of these markets on a really short-term basis, or we could position trade and swing trade and take our time. I'm just kind of a 10-minute, this is kind of my thing.
What about your timing? I mean, when are you trading? When are you in front of your screen? Is the market as liquid, at 2 o'clock in the afternoon as it is at 9:15 in the morning, or what? I mean, if you're day trading, when during the day are you trading?
Yeah, I mean that's a great question. So I like to break it up into segments. If you think about segments, so I like to think that there's a pre-market, and I'll use Central Time, Chicago time. So 7 o'clock to 8:30 in the morning is what I would call pre-market, right?
Okay.
The institutional desks are up and running. People are positioning their their trades. Volume is coming in, and they're in that pre-market period. You have the economic releases, CPI and that kind of stuff, jobless claims, which is Thursday, is released right into the into the atmosphere, and so you have that piece of really important economic data coming in. So that pre-market is kind of number one.
Okay.
The next segment that I identify anyway is the cash open, right? And I'm using the New York Stock Exchange as that driver because it really does drive a lot of these other markets. So that's 8:30 to 9. There's a half an hour period there where in my mind it's the open, right? And this is really when the volume comes in and things start happening. Then the period I really like is the 9 o'clock Chicago time to 10 o'clock or 10:30 Chicago time. So right before lunch, after the open, right before lunch, then things start settling down. We have much more price information to decide, what we want to do, what we don't want to do, and it gives us this.
So that's this time. That's 10 to 11, right?
Yeah. You timed this perfectly, Spencer. I greatly appreciate that.
Okay. Wait. What exactly is so good about this hour of the day?
Because from 8:30 to 9, when the market opens up, don't forget we have institutional investors, we have commercial investors, which are usually hedging positions. We have systems and algos kicking in. So they're different types of. They have different objectives, different time frames. And so for me and you to take advantage in the day, in a smaller increment is where we kind of can get in there. That's why. Let the dust settle from 8:30 to 9. Again, this is my stick. Let's study for a half an hour and then get involved. Now, there's some folks that, hey, I'm only trading the open. Man, this is where I want to be. I'm just not that good at it, to be honest with you. So, and then as you go through lunch, kind of volume is way down. It's slowing down. It gets sloppy. Right? So we just got an order filled here on NinjaTrader, and then the close, right? 2 to 3 Chicago time when things are closing are pretty good, in my opinion as well. Nighttime's a little bit less, volume, obviously.
Right,
but
right.
When Europe opens up, when Frankfurt, Germany, Eurex exchange opens up around midnight, and then London opens up, then you get some volume again.
Okay, so wait, let's just walk through what just happened there. So you just got filled on an order. So
yes.
Walk us through this trade again, and then we didn't even talk about the exit strategy when we threw the order out there. So let's talk about that for a second.
Yeah. So right now, what I'm going to do is I'm going to say, hey, listen, we're long right now. I'm going to just throw a profit target up here for now, and I'm going to be above this dark blue value area right now, right? I'm gonna put it up above that because I want to see this market make new highs, and I want to see it attack the overnight high, right where we started from, and I think it's a reasonable idea. So what I'd simply do is I'm gonna go to my price. I'm gonna literally try to maybe go 8 ticks or 2 points above, so 63.25. And I'm just going to right click and I'm going to send a limit order to sell a contract, right? So I want to sell this market up here, right? And then alternatively, okay, where do I admit I'm wrong? Because there's points where you could admit you're wrong, and really this is kind of a tough place to do that at. But let me kind of expand this a little bit here and show you. So the bottom of the value area is pretty far away, and that's probably too much for me. So I'm going to use this 50% and this 38% and this candle low right here, and I'm going to give myself some wiggle room. And so I'm going to put a stop loss around this area right here. And I'm just going to again right click my mouse, and this will be a sell stop, right? Because I'm long and I want to sell one if I'm to make myself flat, right? So
right.
I'm going to send it like that. So throughout the course of the trade, you could manage this however you want, but right now that's immediately what I'm thinking. Again, my bias is bullish, and maybe I'm right. Maybe if sometimes you're right, sometimes you're wrong. But once you get some muscle memory, hopefully things work for you.
And to be clear, you have a bullish bias because of the market today, not every day. It's just the way it worked out today.
Yeah, and when we get to the tip of the week later on, I'm going to discuss that a little bit more. But yeah, overall, right now it's bullish. It could change tomorrow, right? It could definitely change tomorrow. But this is a strong market. There's not a lot of places you can go. I mean, for alpha. So the other thing I just wanted to point out here, my P&L is shown on the trading ladder or on the actual label here. Green is 1. I'm long 1. I'm minus 50, half a point right now. Each point's worth $12.50, and it's dynamic, right? It's dynamic, so it's you can see it in real time.
And I see those orders are GTC, which means good till canceled. We spent 10 minutes on one market here. Jim, let's move on to another market outside of the S&P 500 futures. I'll let you lead the way there. I don't know where you want to go. You want to go commodities? You want to go Bitcoin? But
I'll spend 5 seconds on the NASDAQ.
Okay.
So this is, again, it's a stock index future. It's, it used to be called tech stocks. Now it's non-financials. There's 100 of them. So, and they're not 100% in sync with the S&P, but this micro NASDAQ market's really a great market to trade. So I like to look at this one as well. And you can see it looks a little different on the screen. But crude oil is a commodity that's, it's in the news, right? We're, Vladimir Putin's on TV a couple of days ago saying, hey, we're going to get to $100. And this is
he'd like that, wouldn't he?
Right. And this is a benchmark. This particular contract, it's a standardized contract. It's basically US based light sweet crude, or West Texas Intermediary. It's very liquid, and you can see the volume here on my quote board here, because I have the volume columns on here. 239,000 contracts. It's a lot of volume already, and it's a great place to trade crude. There's Brent crude, there's Dubai crude. Those are also benchmarks, but this one's widely followed and very liquid. So I kind of like to look at this market as well. And I have an old Fibonacci line there. I'm just going to adjust it a little bit. Again, my bias is bullish here. It's a supply and demand market. Will we get hit 100? I don't know. We'll see. So that's kind of a really neat asset class, a really neat market to look at. My next one is the new micro Bitcoin. We talked about this as well. And this is a tougher market to analyze, right? Because it's relatively new, right? And there's not really an underlying, I mean, the whole Bitcoin market is kind of there's not an underlying commodity, right? You're not trading 1,000 barrels of crude oil. You're trading a Bitcoin. So it's kind of tough, but it has been going, it has been very, very volatile, and there's a lot of great opportunities in this particular market.
So I'm just curious, as someone who I look at, the Bitcoin futures, and I might look at the price, but that's all that I'll look at. Because the market is only the Bitcoin futures market is only like 3 years old. I guess from your perspective, how does it compare in terms of volume and liquidity to the other ones? I know that there used to be 2 Bitcoin futures. You could trade the SIBO and the CME, and then the SIBO closed theirs. Now you only have one, I guess due to lack of demand. But how does the Bitcoin futures market stack up to the more traditional futures markets in terms of liquidity, volume, etc.?
Yeah, the other markets are more mature and have a lot more volume, and have a lot more liquidity. This micro Bitcoin product that we see, or market that we see here, is relatively new. It's only a few months old, and it's starting to gain traction, but it's not mature yet. It's in its infancy, and hopefully, and I'm optimistic on it, that will change. Right now, I'd be really careful with it, regardless of where you're trading it, but on the future side as well. But you certainly use best practices, enter on limit orders, give yourself some breathing room.
Can we set up maybe a trade here? Because Bitcoin futures is in the news. We're going to get a Bitcoin futures ETF probably tomorrow. It looks like so. The first of its kind in the US. If you're in Europe, you have that already. If you're in Canada, you have that already. But if you're in the US, we don't have that yet. We're going to get it tomorrow. So you can see the run up there in the futures in the last couple of days as it pertains to this. So let's see if we can set up a trade here.
Okay, so I'm going to do the exact same analysis that I did. I'm looking at my oscillator. It's kind of going sideways now. Moving average cross is diverging. I'm looking to be a little bullish right now. The point of control is 61,685, and then the 68.1 Fibonacci is here. So literally, and I'll be a little more aggressive. See if we can get a fill. And I'm just going to go ahead and right click. My idea here is, hey, let's let the market kind of come to us. Let's see if we could buy one here. And if we can, then we'll manage our stop and everything else accordingly.
Okay.
And you can see it. I kept the E-mini S&P on the trading ladder. You can see, we're doing, so far we're doing okay. And there's a couple strategies that you could do to kind of move your targets and your stops around. But we'll really cover those in detail on Tuesday and Wednesday's trading events.
Okay. All right. There's questions from the chat. I know we're going to get to you guys in just a second. I promise. Was there another market you want to run through real fast, or you want to go into the tip of the day?
Oh, well, so really quickly, two more that are very interesting are, the gold market. Again, same type of analysis could be done here in the gold market. There's a lot of volume here. You could see on my quote board about 117,000 contracts traded so far today. And then lastly, I did want to mention that currency cross. I have the Euro FX versus the US dollar here. That's that's one of the ones I look at and we talk about a lot. So, but yeah, we could do. We're ready for.
All right, let's go into Jim's futures trading tip of the day. And that tip of the day would be?
So here's the tip of the day, and maybe you're trading SPYs, maybe you're trading S&Ps somewhere else, or the futures markets. But what I'm looking at here, we had a really strong price appreciation in the S&P. We had a pretty big dip down. So I drew a Fibonacci from those highs here, which was on September 3rd. And I drew it down to the low, which was on October 1st. And then the second thing I did was I put a 50-period simple moving average on here. And again, we talked about this earlier. I'm bullish right now, and what I want to see is if we get another candle or two, and this is a daily chart, closing above this 61.8, right? Closing above this 50-day moving average. That, in my mind, kind of solidifies the idea that we're back on track, at least for the next, I don't know, short term, that we're in one bull market. So look for that. Look for this close above the 44.33, 44.25 area. It looks like we're going to do it, it's pretty far away, but you never know in the markets. There's a lot of volatility. So that's the tip. Just look for that area to kind of reinforce your bullish or bias point of view.
Yeah, we see this a lot, especially with like the SPY, for example, which is it bounces off a moving average, whether it's the 50-day or the 200-day. But moving averages they're the easiest indicators to understand, which is why I think they're the most popular. So, okay, there are some good questions in the chat. Let's go to those questions. I promise I'm not ignoring you. I'm going to scroll to the top here. Okay, let's start with this one from Vinny Gagliani. What is the margin / account size needed for smaller contracts? I assume he means the micros.
Yeah, so I mean, depending on which brokerage firm you use, I mean, day trade margins for micros, I've seen as low as $50 a contract, right? So it's capital efficient. Careful with the leverage, works for you as well as against you. But literally, I've seen $50 day trade margins for a lot of the micro products. Sometimes they're $100 depending on which one.
Jimmy is asking a question that I asked myself when I was first learning about this: was what exactly is the E-mini? I think the branding is what throws a lot of people off, because people don't know what the hell that means.
Right. So what happened was, the S&P 500 was pit traded in the future side, right? Yeah. In the 80s, it was huge. It was the biggest pit in the world, right? A lot of big players came. The CMA was smart enough to say, hey, this electronic thing is coming. We want to have this contract electronically traded and expand the playing field for more retail traders. And they did that, but they had to make it a smaller size contract, not to overly anger the pit traders. So they made the smaller size contract and they called it the E-mini S&P, just not so you didn't freak out the members on the floor of the exchange. And so the first product was called the E-mini S&P, right? And it's not E-mini by any means. The S&P right now is literally, the notional value is $50 times the price, which is well over $200,000 for one contract. So it's not mini, but that's how the naming convention came for the E-mini. Then fast forward again, they created the micro E-mini S&P, which was 1/10 the size of this market. Still a big notional value, $20,000, but again, it made futures trading accessible to just about anybody. Yeah. So that big S&P, E-mini S&P electronic, and then the micro E-mini S&P.
That's I did not know that, so that's helpful to know. I just knew it was the naming convention. Dean wants to know, as far as our stops, I guess we sort of answered this already, but are you using it on like a risk reward thing, or is it just technical for you, or you just showed right now you use the Fibonacci, you just do it a stop at one of the Fibonacci levels there. So
yeah, so we get into way more detail on Tuesdays and Wednesdays. Okay. In what I just did, and I really wanted to demonstrate a trade idea. But yeah, I split the difference between the 50 and the 38. We don't really have a clear and present signal or point of interest in the middle, in this dark blue area here below the point of control. So yeah, this is kind of just a little bit of muscle memory, a little bit of this might be a good place to put it. The other thing I did also was I looked at the low of this wick right here. Let me just change my this wick right here. Was what I would consider the very lowest area of support, even though it's wonky because we have a higher low here for my trade idea. At this point, you could do a lot of things. You could move your stop to break even, or you could say, hey, I'm up, $175, and I want to get out and book my profit. You could do those kind of things really easily, and you could use the trading ladder of the chart. Just to change a stop, you're just going to click and click, and literally that's how easy it is to do that. So again, a little less magic than we usually see, just because we don't have a lot of time today. But I just wanted to throw it. That's the answer.
John Citrone, did I think I got that right? Is asking a great question here. What would you say are the main differences between trading futures and trading options? And he means really just by the way they're traded.
Oh my goodness! All right, so
it's a big question.
No, yeah, but really it's in the liquidity. I mean, look at the bid and ask. I'm going to freeze the ladder here. Look at all the bids and asks, how tight the bid ask spread is. It's one tick, right? It's one tick. And you could easily get in and out. Well, I shouldn't say easily, but it's more inclined to getting, providing you with the ability to get the price that you want to get. If you're doing limit orders and if you're doing stops, then, you may or may not get slippage, but it's so liquid that it gives you that the tighter market, right? So it's very, very liquid. And options, a lot of times, depending on your strike price, you're going to see a wide bid-ask spread, right? And it's one thing getting into an option position, and another thing getting out. So that spread is the cost of doing business, right? That spread is the cost of doing business. And so I like the tighter liquid markets. The other thing that's, when you flatten a position here, your margin is you're immediately ready to go again, right? You could place a trade again. You don't have to wait, right? And sometimes in our equity trades, we got to wait for settlements and stuff like that. And then lastly, there's no time decay here, right? There's no time decay you have to deal with. So those are kind of 3 bullet points. There's others too.
And then can we just do a real quick run through again of the indicators on the chart?
Yeah.
Real fast.
Yeah, so I'm relatively simple. So I went from really complicated as a younger man to as an older man, I'm pretty simple here. So I have at the bottom I have an oscillator, right? And mine is the commodity channel index. You might use a MACD, an RSI, or something else. Whatever you use is fine. Oscillators are going to oscillate around a middle point based on an equation, right? And they're lagging indicators, but still it gives us an idea of momentum. And there's usually a band, a high or a low, right? So mine is called the commodity channel index. That's the very first one. The second one here is just a simple moving average cross. It's a 6-period a fast moving average and a 26-period slow moving average. And again, I'm looking for convergence and divergence on the cross as well as crosses on the cross. So that's kind of 2. 3, now this is again unique to futures trading, this volume profile here. Since we're one exchange, we're one we're one place. There's not a bunch of different ECNs and a bunch of different over-the-counter markets. You can see all the volume, right? So it tells me where market happiness is, where buyers and sellers over a period of the session, are doing deals, right? Not really doing deals because it's electronically traded, but this gives me this profile. Then lastly, the Fibonacci, which you could use on anything, which I think is really neat. I don't know why it works, but there's a self-fulfilling prophecy maybe. But
you can make the case that that's what technical analysis is a self-fulfilling prophecy. But you're right. I've also wondered, why does this work? Oh, it just seems to work. I don't know.
Right.
Okay. Jim, you have mentioned a couple of times there that you go into more detail on the NinjaTrader webinars. I've got the link up on the bottom of the screen there. It's ninjatrader.com/platform training. The link is also in the description of this YouTube video. And just Jim, when are these webinars?
So on that page, you're going to find a whole bunch of great events, right? A whole bunch of great events. On Tuesdays and Wednesdays, 10 o'clock Eastern, 9 o'clock Central, what we do is I'm going to show you the same platform that we have up here, and we're going to look for trade ideas together. We're going to go more in depth on, we do a fundamental analysis. We talk about numbers and economic releases and what the Fed is doing and all of that global stuff, global macro stuff. And then we pop in, we kind of come up with some trade ideas and we talk about it. The cool thing about it, Spencer, is interactive. There's folks that are coming in, typing in stuff and their opinions and saying, hey, Jim, you're wrong. Here's what you should look at. And it's great. This is great dialogue, great community. So that's Tuesdays and Wednesdays at 10 a.m. Eastern time.
And then we'll be back on this show every Monday, 10 a.m. Eastern time, 9 o'clock Central, a half hour after the open, doing what we just did, but just going into more detail. We'll get some more trades going. We'll answer more questions. We'll go into more detail on different markets. The other reasons, there are many reasons that Jim prefers futures over equities. We'll go into more about that. We'll talk about how to make money trading this market. So that'll be every Monday now here. So what I want to see from the chat is a few more likes. I'm not happy with the number of likes, right? We got to get to at least 100. That would make me happy. I mean, come on. A new show. It's not every week we have a new show.
We want Spencer to be happy.
Yes, you want me to be happy. When I'm not happy, I'm not happy. So thanks very much to Jim Cagnina. He is the NinjaTrader senior. Let me see if I can get this right. He is the senior education and training specialist. Did I get that right?
Yeah, or you could just say he's the old guy who's seen a lot over the last 30 years.
He's the old guy who's seen a lot in the last 30 years. We'll be back on the show, on this channel, next Monday. You can hear more from Jim, see more from Jim with the link that was just up on the screen for like 5 minutes. And also in there are several links in the description of this video. Jim, do you want to leave us with a final parting thought today?
Well, thanks for letting me participate in this. This is a lot of fun. I'm looking forward to going forward every month and adding more and more in-depth content and trading ideas.
All right. That's going to be a wrap for Future Trading with NinjaTrader. SPAC's Tax is going to be live at 11 o'clock. Thank you, Easy Mike, for the compliments on the format. We try to keep it short. We try to move. We try to hit a lot of stuff as we can, because there's a lot going on here. I know we're all in a fast market, so we want to be efficient with our time. I hope we were. We'll be back next Monday. Mitch and Chris going live at 11 o'clock. Everyone, let's get some more likes, please. Thank you, and subscribes while you're at it. And Jim, have a good rest of your day, sir. And we will talk to you again next week.
Spencer, awesome. Thank you.
All right.